Layoffs, effects on limited partnerships, syndications. Well, it depends. There'll be a lot of different effects. If you're in the middle of a large value add project where you're dependent on a lot of these products like wood, cement, fuel costs will probably go up, things like that. Um, you just have to watch and see that potentially those things might be affecting the overall project. The fund manager or the operator, if there's a good operator, he'll have probably priced some of it in, but it's tough to do that because you can't look ahead, especially a year, 6 months out. You don't know where inflation is going to be, and we didn't see a lot of these large tariffs coming in. It could be 25% on Canadian lumber, which would affect construction. If you do have a large rehab project, could affect your returns, could affect the overall net operating income of the property. But if you're in the middle of a stable project, like that's why we like stable projects and a lot of new development, because it's stretched out over a longer period of time, and the stable projects are already going, and you have just minimal costs where you're not really affected by the tariffs. But the layoffs, that could affect a whole range of different classes of properties, A, B, or C. All of them could have layoffs. They'll probably get a severance package now, and then the layoffs from the government could affect, especially if you're in those areas, which doesn't seem like there's any part of the government that's going to be touched or affected by this, and we'll see how that all plays out. But hopefully it doesn't affect your properties and your syndications. But those are a couple of things you should look for and probably do a deep dive into. Again, if you like these videos, feel free to like, subscribe, comment below. My name is Scott Kidd. As always, be clear, be grateful, and listen.